A lot of people are saying that in 2026, Bitcoin could rise over 100%, then crash again in 2027. Some are even saying there's no reason to hold Bitcoin long term after that. So today, I'm going to break down if that's true, what history shows, and what smart investors are actually doing right now. No hype, no fear, just facts. Why people expect Bitcoin to rise in 2026? Bitcoin moves in cycles. About every 4 years, there's something called a halving. That's when the supply of new Bitcoin gets cut in half. When supply goes down and demand stays strong, prices usually rise. Historically, after each halving, Bitcoin enters a bull market within 12 to 18 months. That's why many analysts expect strong growth in 2025 and 2026. A 100 to 150% move in Bitcoin during that time is not unrealistic. We've seen it happen before, so the idea that Bitcoin could double in 2026 has real data behind it. Why people expect a crash after? Every major Bitcoin bull run has been followed by a major crash. In 2014, Bitcoin dropped over 80%. In 2018, it dropped over 80%. And in 2022, it dropped over 70%. After prices rise too fast, the market overheats. Speculators pile in, leverage increases, then something breaks. When that happens, prices fall hard. That's why many people expect high volatility in 2026 and 2027. Not because Bitcoin is failing, because cycles repeat. What's different today? Here's what most people ignore. Bitcoin today is not the same as Bitcoin in 2017. Now we have spot ETFs, institutional investors, Wall Street exposure, corporate treasuries, and retirement funds. Large institutions are holding Bitcoin long term. They are not day trading. They buy, store, and hold. That changes the market structure. It creates stronger price floors over time. Each cycle, Bitcoin's low gets higher. That's important. The biggest myth about Bitcoin crashes is people say Bitcoin always goes back to old prices. That's not true. After 2013, Bitcoin never returned to $1,000. After 2017, it never returned to $20,000. After 2021, it barely touched 69,000 again. Each cycle creates a new baseline. So even when Bitcoin crashes, it usually crashes to a higher level than before. Long-term holders understand this. Short-term traders ignore it. Two types of Bitcoin investors. There are two main types of people in Bitcoin. First, traders. They try to buy low and sell high every cycle. If they do it perfectly, they make a lot. But most don't. They sell too early. They panic. They miss re-entry. And second, accumulators. They buy consistently and hold. They don't try to time tops and bottoms. Over 10 years, this group usually wins. The smart hybrid strategy is most wealthy crypto investors use a hybrid strategy. They keep a core position they never sell, usually 50 to 70%. That's their long-term wealth reserve. Then they keep a smaller trading position. They may sell part near peaks and rebuy later. That gives them upside without risking everything. It's disciplined, it's structured, it's sustainable. What this means for 2026 and beyond. Yes, Bitcoin may surge in 2026. Yes, there may be volatility afterward. That's normal. But that does not mean Bitcoin is finished. It means the cycle is evolving. With more adoption, more infrastructure, more global demand, Bitcoin is becoming a permanent financial asset, not a trend. So, is it smart to abandon Bitcoin after 2026? No. It's smart to manage risks. It's smart to take profits. It's smart to have a plan. But long-term exposure still matters. The investors who win are not emotional. They are consistent. They are patient. They are prepared. If you want more breakdowns like this, subscribe, and I'll keep bringing you real financial strategies without hype and without fear. Starman Media.